Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here, you'll learn how to become fearless inside financial markets. This will assist you to become more of a financial and emotional blessing to yourself and those you love. In this video, we're going to go through Rule 45, no alt can escape Bitcoin's gravity. I'll help you to understand total crypto market cap, total 1, total 2, total 3. These are really important concepts that you'll need to learn. Then we'll explore how to find in-focus crypto projects, those ones that have investor attention through the CTKS factor. The ultimate strategy to adopt when you know your structural support and structural resistance levels. You need to buy on red and to sell on green. Buy on red, 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 and so forth. Why is this the case? Because price is simply moving in a wave. What typically happens is exactly the opposite. We feel really good when things are going green. We say, ooh, all in and more, and people buy. And then what happens? It just goes red. And this is pretty natural, especially inside the crypto market. But it's natural inside all markets. This is the death of 1,000 cuts, because when you buy on green and you sell on red, you're making a loss. You're always locking in losses instead of locking in profits. This is very difficult to overcome emotionally. The reason that people can't buy on red is simply because they're freaked out. Everybody wants to buy the bottom, but nobody is there except the professionals when it occurs. So just think about this. When it's going red, like what we're seeing right now, this is the ultimate time to step into the market. But it's a lot more than that. You can't just buy every red. You need to understand what you're doing, especially structural support and resistance levels. And I'll take you through a really good understanding of those. And I'll put it all together for you. If you like the content, please subscribe and smash that like button. All the indicators that I use on the daily video come from the service at CTKSMethod.org. Let's run the numbers. In today's video, we're going to talk about Rule 45, no alt can escape Bitcoin's gravity. Every field of endeavor has rules, and no alt can escape Bitcoin's gravity is a really important one for the crypto market. You can see here, this line is Bitcoin. And what is the candlestick chart behind it? That's total crypto market cap, or the total market capitalization of all the other cryptos. Total crypto market cap is the market capitalization of Bitcoin, Ethereum, the stablecoins, and all of the alts. So when you look at total, you're seeing everything inside the crypto market. We can see right now, total crypto market capitalization is currently $1.633 trillion. We can see that Bitcoin's market capitalization is $836 billion out of $1.633 trillion. That's quite a big chunk. This is why we have Total 1. Total 1 is market capitalization of all the crypto market without Bitcoin, and we can see that's currently $796 billion. But what if we were to take Ethereum out as well? By removing Bitcoin and Ethereum, we get the total crypto market cap less those two, which is $494 billion. But the one thing that we notice, no matter what is happening, Bitcoin's gravitational pull is pulling the crypto market either down or it's pulling it up. Let's have a bit of fun and merge all these together. What do we see? Total crypto market cap is currently $1.636 trillion. Total crypto market cap without Bitcoin, $797 billion. Total crypto market cap without Bitcoin and Ethereum, $494.84 billion, and that's rock and rolling around. And what about without the stable coins, Tether and USDC? That means the total crypto market cap without Bitcoin, Ethereum, and the stable coins, just those two, Tether and USDC Circle is $374.5 billion. And when we look at Tether, in terms of market capitalization, Tether is number 3, in excess of $90 billion. What about USDC? Well, it's really minor, $25 billion, but that's quite a lot. But our point is the rule. No alt can escape Bitcoin's gravity. We already know that as Bitcoin comes down, it pulls the entire crypto market down with it. But when it rallies, it pulls the entire crypto market up with it. It's critically important to look at Bitcoin when you're making your crypto decisions. As no alt can escape Bitcoin's gravity, it's important to look at how the alts are going relative to Bitcoin. To do that, we use the CTKS factor. The CTKS factor measures the relative performance of Bitcoin versus a specific alt. And when we look at Ethereum, we can see the CTKS factor is showing that Ethereum is underperforming Bitcoin in percentage terms at the current time. The reason that we use the CTKS factor is to understand what has investor attention. At the current time, AVAX has investor attention. ADA does as well. What we want to see is alts outperforming Bitcoin. What about NEAR? NEAR is doing really, really well. And when we look down, IMX also doing well. But do we have any standouts? Yes, TIA is really standing out at the current time. What about AUDI? AUDI is doing really well. And sometimes you see this with new projects, but Fetch AI is not a new project, but it's also just dipped below, so we need to change this. Okay, what else do we have? GMT. These are basically turnarounds. When you see this sort of orangey color, you're looking at something that could be turning around. But you have to be careful with the alts. The alts are by nature very, very volatile. They can come up and spike up and then retrace. Doesn't mean it's a bad project, just means it's Bitcoin's gravitational pull on that specific project. And we can see the same kind of pulls occurring right across the board. And sometimes you have a stronger follow through, but no alt can escape Bitcoin's gravity. The alts have been coming down for a while now. Just something that you need to keep in mind. You can see that weakness in the alt market. You basically want to track what has investor attention. The more investor attention that something has, the safer you tend to be. But you, of course, need to know what you're doing. You want to probably keep away from the very red ones, and there are some red ones in here. The redder is not the better in this case because it doesn't have investor attention. And sometimes they don't have investor attention for very specific reasons. Sometimes you'll find that certain projects are way, way under Bitcoin's gravitational pull. It doesn't make it a bad project, it just means that you need to be careful how you invest or trade in it. For example, a lack of investor attention can mean people are basically just pulling their money out of that specific project. For example, when we look at Bonk has had a lot of outflows. Its CTKS factor is highly negative. It doesn't mean you can't make money in Bonk, but you do have to be careful because the overall trend is to the negative side. Of course, if you're shorting cryptos, seeking a CTKS factor that's highly negative is a good idea because the probability of it continuing to go down is likely. When we're seeking to trade, we're seeking to get in on investor attention. The CTKS factor can help you identify where investors and traders are looking. Of course, then, the next thing is to mark up your charts with the CTKS method to make sure that you understand where structural support and structural resistance levels are. But before you get into any alt, you must understand the structural support and resistance levels on Bitcoin. Looking at the structural levels on Bitcoin will assist you to understand, do we have further to fall, or are we at support, or are we getting into resistance? If you don't know the answers to these questions, you're typically guessing, and if you're guessing, that's really bad for your financial state. We can see that Bitcoin was rejected from this very strong structural resistance level. This structural resistance played out from around that 46,200 mark up to 46,700. We saw that we just couldn't get above it. And with the spot Bitcoin ETFs, we had a lot of turbulence in the market. The big institutions want to make sure that their spot Bitcoin ETFs show massive appreciation over time. That's their incentive. How do they do that? They drive the price down at the start. Of course, Bitcoin's price could have had a God candle, so that's something that you need to bear in mind. You need 3 simultaneous strategies playing out at all times: a bull case, a consolidation case, and a bear case. Typically, people have only one case. It's only up, or it's only flat, or it's only down. The better way to approach the market is just to understand the price is always moving in a wave. It's always going up and down, up and down. But where is it going up and down between? You got it, between structural levels. We can see this 42,860 structural resistance level has been rejected a number of times. That puts the probability of us going down to 41,514. If we can't get above, we're going to the next levels down. And if we have confluence of these structural supports, that makes it easier for price to come down, tap it, and rebound. At this stage, you may think, I've got enough to get into my beloved alt. Say you were looking at ADA, you don't have enough yet, you've got the very starting point. Let's go across to ADA's price chart. Now, what we want to understand, and ADA is inside the CTKS Method service, which just has an indicator to show you the structural support and resistance levels. We can see at this 5400 mark, we have structural now resistance. It was support, but now it's become resistance. Where would a good place to buy be? Well, just down at these structural supports, 51.27, 50.73. You get the idea, 50.57, and at lower levels. When you know the structure, you'll understand that we have a negative fresh air gap on ADA. Even though ADA is doing quite well, it's really positive on the CTKS factor side, but that doesn't mean that structure won't override price momentum, according to Bitcoin's gravitational pull. What typically happens, people tend to go all in and more on one position. For example, say you wanted to get into ADA right now, and you thought to yourself, I'll get in at this 49.81 level, and you just wanted to trade to retrace this price momentum, which is about an 8.41% return if you were to do that. What happened if you just bought up at this level? Do you still get 8%? No, you get 5.4%. What about if you went down a little bit more deeply, just say around this level, 6.56%? What you will find is there's another rule playing out. Profit is made when you buy. More specifically, where you buy. If you can find lower levels of structural support, especially if there are a congregation or accumulation of structural support lines, you're much safer in those areas. And then you have to set a reasonable targeted rate of return. The key to your profitability is always to be able to mark up the structural resistance and structural support levels on any chart. Price is simply moving from structural level to structural level, and when you get safety nets, you can turn some very nice profits even if price continues to come down. You can learn to apply the CTKS method, both level 1 and level 2 standard certification, so you can draw up those structural levels on any price chart through ctksmethod.org, or you can just get the indicator through the service. Always bear in mind that where you buy is incredibly important. You want to buy around clusters of structural support levels. If you're DCAing or dollar cost averaging in, you want to know where those structural levels are so you can place limit orders there. Don't just say every Monday I'm going to buy X dollars. That is a really bad way of DCAing. What you want to do instead is look at the structural levels, mark up your charts. It will make all the difference in the world, and you don't want to be exiting as price is coming down. If you believe in what you're doing, if it's purely speculative, that's another thing. But if you understand where the market is headed, and crypto is going through the roof, absolutely, but it doesn't mean tomorrow. Getting in on these price retracements is ideal, but a lot of people just won't be in the market. As soon as the market turns red, they run away. This creates a really nasty scenario that I call the death of 1,000 cuts. What happens? People see the market coming up. They buy. And when the market comes down, they say, oh my goodness, I got it wrong. Sell. And then what comes next? The market goes up, and when it goes up, they start to buy again. When it comes down, they start to sell again. This is the exact opposite of what you want to do. Inside the masterclass, I share many decades inside financial markets, the experience of how to buy on red and how to sell on green. It is a completely different mindset and one that won't come easily. But you will find it's the most profitable thing that you can do. When you buy these retracements, when you're buying on red, you can turn incredible annualized return on investments by just selling on green. Buying on red, selling on green, buying on red, selling on green. You see, you're doing it the opposite way to everybody else. That is the way forward, and we have a lot of our global family who've done really well for that. But it's not easy to do. Often what you will find, you'll get overcome with fear. When the price goes down like this, it just plummets. The first thing that everybody thinks, just naturally, oh my God, this thing is going to go way down further. I'll just sell here and I'll buy back later. And what happens? Price gets away from you, and you tend to fall into the death of 1,000 cuts. Instead, we have a very scientific approach. We know that no alt can escape Bitcoin's gravity. We know which ones are doing well and which ones don't have market attention. We also know where structural support and structural resistance levels are. We also do our cheat sheet, which means that we know how the entire market is moving. We have a scientific process, and that's what you need to be profitable. I hope this deeper exploration into Rule 45 has been of assistance to you. Just always keep in mind what are structural support and structural resistance levels on Bitcoin and the projects that you want to get into. That's the key. And then just contextualize it looking across the cheat sheet via Rule 446. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.